Hello, and welcome to another episode of Mathison Talks, where we discuss tech and everything in between. As always, we would love to hear your comments as we're checking our Twitter and LinkedIn at Mathison Talks. My name is Mike Vega. Quick note, this episode is going to be an expose on the topic, so we're not going to have the traditional back and forth between Mariano and I. This episode is brought to you by Mathison Projects, Inc., a web development company. Today, we will be talking about Cathie Wood and her unrivaled confidence in believing in tech as an investment in the stock market. Who was and is Cathie Wood? Today, we're doing a full profile on one of the icons for a whole new generation of investors. Cathie became the assistant economist for Capital Group, one of the leading investment firms in the 1980s, valued at billions of dollars. She worked at the company for 3 years before being poached by another investment company, Jennison Associates, with a new position as chief economist when she was barely 25 years old. As her chief economist in the 80s, Cathie Wood was facing the U.S. economy at its tipping point. During Reagan's reign as president, he had some economical policies that weren't very tested. It had many investors believing his policies would collapse the U.S. economy for good, but Cathie Wood thought otherwise. In a recent 2022 interview, she gave some insight into what the sentiment was in regards to the stock market in the 80s. She states, inflation and interest rates are embedded in the system at double-digit rates. This was the prevailing thoughts in the 80s. Wood challenged this idea by suggesting that not only had interest rates peaked, they would even decrease. But being a young woman in finance in the early 80s, she was easily dismissed. However, once again, she was right. By October in 1982, inflation had fallen by 5%, and the Fed allowed the interest rates to fall back down to 9%, which at the time was pretty low. As America rises from the 70s economic slump, Cathie Wood reached a new height. She rose through the ranks, soon becoming the managing director for Jennison. By 1998, and after 18 years at Jennison, she built a career that many thought would be impossible. In the 90s, hedge funds took off in popularity, particularly in the way they were structured that made founders insanely wealthy. Everybody wanted to own a hedge fund, and Cathie Wood had her sights on a new goal, starting her own. By 1998, Cathie Wood started her own hedge fund, Tupelo Capital Management. The only problem? It was right before the dot-com bubble. By the 2000s, her fund garnered $800 million in assets, the largest female hedge fund at the time. However, Cathie Wood discovered hedge funds weren't her true calling. Her real passion actually was at picking stocks of companies that had world-changing potential, ones that are undervalued by Wall Street. So after 3 years, she left the hedge fund she co-founded and joined a mutual fund company, AllianceBernstein. After the dot-com bubble, she sees a disconnect with the VC funding versus the public funding. She states in an interview, I felt there was a huge unmet need in the market because after the tech and telecom bust, as well as the 08 and 09 recession, over those 10 years, we saw risk aversion rise in the market. What did that mean? There was a huge move toward index or passive strategies that were largely considered safe. It was at this time that Cathie Wood started developing her thesis on the exponential growth on innovative companies. At Bernstein, Wood was given $5 billion to manage. So she proceeded to look for her pockets in the market that nobody looked at, particularly companies with high growth potential in smaller cap stocks. It was at this time that Cathie Wood started developing her thesis on the exponential growth on innovative companies. At Bernstein, Wood was given $5 billion to manage. So she proceeded to look for pockets in the market that nobody looked at, particularly companies with high growth potential in smaller cap stocks. Before 2006, Wood's fund at AllianceBernstein would outperform the indexes every year. Then the housing market crisis of 08 happened. Because her investments were placed in smaller growth stocks, their price tends to be more volatile. And during a liquidity squeeze, their price tends to fall harder due to the smaller number of buyers in the market. As a result, her fund fell harder than the S&P 500 in 2008. She believed her stocks would have eventually recover, but it does little to promote the confidence of her investors, and some start withdrawing money. Worrying about losing clients, executives at Bernstein asked Cathie to buy some index funds in her portfolio. On one hand, owning index funds reduces the volatility of her portfolio, but on the other hand, it also reduces her performance. By 2014, it becomes abundantly clear that she has to leave. At 54, Cathie Wood has made more money than 99.9% of Americans. With her extreme wealth, she set out on a new mission, and this time she was determined to answer to no one. And so, in 2014, ARK Invest was launched. Cathie Wood set out to create new ETFs that didn't yet exist in the market with ARK Invest, and some of them still don't. After 2.5 years of no traction in ARK Invest, that changed when an unexpected investor came calling, Bill Huang. Before his catastrophic blowup, Huang was at the top of the hedge fund game. He only started with $25 million to start his hedge fund. However, in less than 20 years, Huang built his hedge fund to have over $30 billion in assets. With his eyes set on Cathie Wood for her proven track record, he decides to provide the seed money for her ETFs. Huang's funding gave Cathie Wood the boost of confidence she needed, but to actually succeed, she will need to find a way to stand out. By 2019, index funds have more assets than all of the active funds. Cathie Wood thinks she can do better. Wood realizes she can do what GitHub did to software by making her research openly available. Think open source market research, where anybody can go in and see what's under the hood, so to speak. At the time, this was hugely going against the norm, where it was standard for firms to consider their research proprietary information. In an August 2018 interview on MSNBC, a host asked Cathie Wood, "Do you still think Tesla is a $4,000 stock?" She answered with a very confident yes, which was a 1,100% increase from its price at the time. This had many investors skeptical at her price forecast. At the time, Tesla was struggling with production to the point where Elon Musk would even sleep inside the factory trying to solve issues with production. Cathie Wood's optimistic view on the forecast of Tesla's future was widely ridiculed, but she was right. By 2021, Tesla had surpassed her price target, 2 years ahead of her initial forecast. While she was dismissed by the establishment in 2019, one group of investors had already been taking notice, the self-proclaimed apes. 2020 was the perfect recipe for retail investors to move markets. It was a time where many were home due to the COVID pandemic. Trillions of dollars were printed in the form of stimulus cash, where a trading app called Robinhood made it extremely easy for retail investors to finally get a piece of the pie in the stock market. There was a call to arms, so to speak, to take on the establishment in the markets and disrupt the status quo. As a woman who was often underestimated by Wall Street, Cathie Wood quickly became the icon of retail investors. It was at this time ARK Invest went up 100%. However, the markets are constantly switching sentiment from bullish to bearish, and unfortunately, in 2021, she was about to find out just how volatile the markets could be. And so the bear market began. Fast forward to today, 2022, when new headlines are emerging about ARK Invest. For example, this article came out by Market Insider titled, "ARK Invest is outpacing the decline seen during the dot-com bubble, and a long-term recovery will be difficult." If we look at the data, Cathie Wood's fund, ARK Invest, has dropped 77% since its peak, with some experts saying that ARK's recovery is going to be more challenging than the NASDAQ 100 recovery, mainly because it does not own as many large seasoned companies in its portfolio. One of the main reasons why ARK Invest is having such a challenging time in the markets is because the interest rates are rising, not falling. That's a comparatively tough environment, as higher interest rates are not favorable to unprofitable growth stocks that ARK Invest owns. On October 10, 2022, Cathie Wood, in a seemingly act of desperation, published an open letter to the Fed saying they are risking an economic bust. Her letter calls for the Fed to stop increasing rates, stating it's making a mistake in its hardline stance against inflation because it's looking backwards. As expected, this drew criticism and support from Cathie, as there is much uncertainty in the market today. Who knows what will happen in the future, but as a story we'll be watching closely at Mathison Talks. We end this story with a question to our viewers. What's your stance on Cathie Wood? Many see her as a sort of maverick, while others say she just got lucky a handful of times. Feel free to leave your comments where you find us on all social platforms at Mathison Talks. Additionally, if you have feedbacks or suggestions on a topic, we love to hear your constructive criticism. And this has been another episode of Mathison Talks. Thank you.